Stock market and SoFi investors, welcome back to the channel. My name is Jason. In today's episode, I want to break down for you why I think right now could be a generational buying opportunity for SoFi stock. We're going to break down all the reasons why I think the price of SoFi at $15.85 is absolutely ridiculous. Just what, 5 or 6 months ago, it was over $30 per share. It's been getting absolutely obliterated over the last several years. I just want to be transparent with you guys. I currently own well over 6,000 shares of SoFi stock. In my Big Dog account, I have 6,000 shares of SoFi. In my Robinhood account right here, I own about 600 there. I have some in smaller brokerage accounts. I got like 30 in my SoFi, a couple hundred in my IRA. Just wanted to be overall transparent with you guys that I am an investor in SoFi, but I do think this could potentially be a generational buying opportunity for SoFi stock. Let's go over the stock here, guys. Morningstar has a 3-star rating, $15.85 stock price. Fair value at $19 in a 1-year target. At the current price of $15.85, still 24% upside from where we're at current levels. And my 1-year price target for SoFi stock is $25 per share. That's closing in on around 75% upside from where we're currently at right now. We're going to go over all the key metrics where I think the stock could go. Right now, the 1-star price, $33 per share. So when it gets up in that range, selling off some of your shares and slowing down your purchasing is probably a good idea. The 5-star price is around $9.50 per share. Okay, so here we go. Let's break down everything in SoFi stock. We're going to start off with the price versus fair value. If we take a look at this chart right here, obviously SoFi is a newer stock, so there's not a ton of data over the last couple of years. But as we can see from this chart right now, on the upside, we can double, triple, 4x what the overall index does. So in 2023, huge gains, 26% for the market, 115% for SoFi stock. In 2024, the market did 24%, and then we did 54% total returns. 2025, 17% for the total market, 70% for SoFi stock, and then obviously on the downside, it's going to get yucky. I don't know why I said yucky, but it is what it is. 3% overall market. Actually, the market is well over that, especially when you look at the financial sector. It's way less than that. Even the S&P 500 is down well over 3.5%. But for the year to date, down about 40% for SoFi. So when it's going good, SoFi flies high. But when it's going bad, it tanks like an MF. But as we get further and further along the SoFi road, the long and winding road, and more institutional investors get involved in the stock, and it's more in these indexes, then the price swings are not going to be as violent to the downside, in my opinion. And I do think S&P 500 inclusion will help that in the long term. Okay, so we're going to go over some of these key metrics. Look at the revenue growth over the last several years. It's crazy. From $984 million to $3.6 billion. Woo, baby. Just crazy. The financial summary, net income from the negative to $481 million. I mean, the growth is just crazy. And it's just been year-over-year growth. It's been very sustainable, in my opinion. Bounced back huge from 2024 when everyone was like, the growth is stopping. This stock is going in the trash. Well, 5-year average, 40% growth year over year. I like that. I like that a lot. Okay, here's what I want to go over, the valuation. Here we go. Price to sales, 5-year average for the index is 4.17 for the 5-year. Okay. Current price to sales, 5.41. Over the last 2 years, it's the cheapest it's been since 2023. Price to earnings, cheapest it's been over the last 2 years. Price to cash flow, the best ratio in the last 2 years, getting back to almost 2022 levels, which is crazy. Price towards forwards earning, cheapest it's been in a while. Forward PE at 27. PEG ratio looks healthy to me. I'm very, very excited where SoFi could go in the long term. Okay, now let's take a look at ownership from some of the biggest companies and funds in the world. So as we get more and more in these funds, and once the S&P 500 is involved in this situation, there's going to be so many more of these funds that are going to have to buy SoFi stock. There's index funds with the Russell 1000, blah, 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 blah. But there's no S&P 500, obviously, because it's not yet in the S&P 500. But as you can see, the top 10 or 12 holders, change percentage is going up. As far as these major funds are concerned, there's only one selling. But BlackRock also happens to be one of the biggest owners of SoFi stock in general. We're going to go over what's happening with these institutions. Vanguard owns 111 million shares. JP Morgan coming in a close second at 93 million shares. And for the most part, outside of UBS and Bank of America, does Bank of America do anything right these days? Hard pass. They're down a little bit for sure, but for the most part, if you take a look, a lot of green here for the institutions. The major funds, all green. You got to love that. As an investor, you absolutely have to love that. Because these institutions are paying their employees to find out what stocks they should be getting more and more concentration in so they can ultimately make more money as well. Now, let's go over this investor presentation and just kind of highlight some of the things that have been going on over the last quarter or so. Record adjusted net revenue of $1 billion, 37% year over year. It's up big time, guys. Record adjusted EBITDA, $318 million, up 31%. Adjusted EBITDA margin. I mean, these numbers are crazy. Adjusted EPS of 13 cents. Fee-based revenue, $443 million, guys. That's a big ass number. Up over 50% year over year. And it's almost at 50% of the adjusted net revenue. And when you have fee-based revenue, it's a lot more predictable, a lot more sustainable. And we love that for this institution moving forward. Record loan originations of $10.5 billion in the quarter. We want to see companies just hitting their goals. New records each and every quarter. New records every year. If we look at the company in totality, guys, I'm very happy with where this company is. People are so fixed and bogged down on the stock price short term. Is SoFi worth 50% less as a company in the last 6 months? Just look at what's happening with the company. If you think that's true, maybe SoFi is not for you. I just am not in that basket of people who want to act emotionally about the stock. I get it. I own around 7,000 shares. I've been getting wrecked, guys. I have not enjoyed the last 6 months owning SoFi stock, but you got to kind of understand the climate. I've been selling a lot of covered calls and buying some other positions like Robinhood, Zscaler, Microsoft, Adobe, stocks that I think are trading way lower than their fair value. Total deposits grew to 4.6 billion, quarter over quarter to nearly $38 billion. Tangible book value growth of 1.7 billion quarter over quarter to 8.9 billion. Whoa. Wowzers. Set new records in members and products. 1.0 million new members and 1.6 million new products. As long as the members are driving growth on the top line and the bottom line, that's where I'm at. That's what's important. Because if you add a bunch of members and the revenue and the bottom line are not growing, those members don't mean shit. We got to make sure that these members are correlating to top and bottom line gains in the overall business, right? So, brand awareness to an all-time high. Unaided brand awareness reached a record 9.6%, reflecting SoFi's strength as a trusted brand name. I have no idea how the hell they figured that out, but it looks pretty good to me, guys. Further expanded the loan platform business. LPB originations increased to a record $3.7 billion. I'm just very excited what's happening with the company. I'm a member. I use the banking. I use the credit card. I use the invest. And I do have my crypto in Robinhood. But now that SoFi has it back, I am considering transferring all my crypto over to SoFi. But I just want to make sure this is a long-term sustainable platform for SoFi and crypto, so I'm not bouncing around all over the place. But now that they have it back, that's huge in my opinion. Just like personal loans, student loans, home loans. Like, I love this huge basket of revenue opportunities for a company. I love the diversification here for SoFi. The members up and to the right. Products up and to the right. It's crazy. I am over the moon with this member growth and product growth over the last 4 or 5 years. It's been truly remarkable. And the durable, sustainable growth. Adjusted net revenue up and to the right. Adjusted EBITDA in millions up and to the right. And adjusted net income. We were losing our ass in 2021, 2022, and 2023. But I saw it. When there was $6, $5 a share, I was like, I saw the trajectory to profitability. And that's how you become a good investor, is understanding the trajectory of companies. And this company blew my socks off. I'm really excited about this company. Adjusted earnings per share, we've seen that go up quarter after quarter and year over year. And the tangible book value, a very important metric to banks, through the roof. I can't say it enough. It's a very exciting time to be an investor in SoFi. If you're not looking at the stock price, if you're just closing your eyes and imagining the business and thinking about the business and you saw these numbers, you would think that the stock would be through the roof. Not always does the stock price in the short term reflect the success of the company. Here's one of my favorite quotes from Warren Buffett that has molded the way I look at investments. In the short term, stocks are a voting machine, but in the long term, they're a weighing machine, which means in the short term, stocks can go up, down, all around. But over the long term, the good companies will eventually get the value they deserve. So, in my opinion, this is a generational buying opportunity at $15 per share. If we just get back to where we were at in the $30, you're looking at 100% plus upside on your investment. And so every share I buy, I'm like, this is a chance of a double up. This is a chance of a double up. This is a chance at a double up. Personal loans, student loans, home loans. I think home loans, as interest rates come down a little bit, will be even a bigger sector for this company. And if we go to news, they're constantly putting out news. SoFi launches big business banking to power fiat and crypto banking on a single regulated platform. This has the potential to be huge. Next earnings is April 29th. They just announced that. SoFi expands the loan platform business with multiple new agreements totaling over $3.6 billion. So it seems like every 2 weeks, they're coming out with some new good news. That short report did come out. I read through it, and it was hard to get through. Those guys at Muddy Waters they should be ashamed of themselves. SoFi and MasterCard partner to enable SoFi USD settlement across MasterCard's global payment network. The partnership with MasterCard has been huge for this company, but there's no way around it. If you've been investing in SoFi over the last year, you've seen some high highs and some pretty shitty lows. Year to date, we're down. My account's down 15% in the Robinhood account. But when we take a look at SoFi as a whole, it's not been great. There's no other way around it. There's no sugarcoating it. Down 40%. Over the last year, we're still up over 40%. So we've had some swings. It's been a little wild out here in SoFi land. But if you take all this into consideration, guys, everything that's kind of happening right now with the company, Anthony Noto's buying a shitload of shares. It's an exciting time to be a part of this company. And I do think over the long term, this company is going to provide great returns for investors. The forward PE is at 27. So all these Wall Street guys are expecting the company to grow pretty significantly over the next year or so. So that's where we're at right now. Price to sales, 5.41 isn't super low, but it's not super rich either. It's kind of right in the middle. And as we get through quarter after quarter, this number is going to continue to shrink because sales, revenue, net profits are going to continue to accelerate, in my opinion, guys. So over the 52 range is crazy, from 860 to 3273. Pretty much dead in the middle of that. And who's going to win? It's going to go down a little bit lower. I do want to see the company figure out a way to stop making so many outstanding shares. I don't want to see any more dilution. If anything, I want to see them take some of their profits and buy back some of these shares. We'll see how that goes in the short term and the long term. I expect S&P 500 inclusion by the end of the year. So my price target for this calendar year, 2026, is $25 per share. With the growth built in and the steady EPS growth, I'm happy where the stock is. I'm hoping about 60 cents of EPS over the calendar year. So if we come in the 70, 75 cent range, which would be huge, I think the stock is going to soar into the 20s as we get closer to the summertime. And I do think once the midterms are over, I do smell a blue wave coming. I'm not political in any stretch of the imagination. I'm not a Republican or a Democrat. And honestly, I think politics are pretty stupid. But we have to understand that they have a huge impact on the stock market. And the war and the tariffs, Trump has been pretty awful for the stock market, right? GDP growth is down. The jobs report was better than expected. That just came out yesterday, I believe it came out. So that's a plus. But overall, for the economy, companies are not hiring right now, and that's never a good thing for Americans with unemployment ticking up. As long as we can keep unemployment under 5%, I think we'll be okay in the long term. And Trump needs to get out of the Middle East. It's going to cost Americans millions of dollars, and they're going to raise prices and cut things that normal Americans need to live a happy, successful life. And I do think come November for midterms, I think a blue wave's coming. So that's going to really limit what Trump can do over his last 2 years in office. And I do think that will be good for the market either way because there's going to be certainty and the market likes certainty. So I am expecting a Santa Claus rally this year after the elections. I think from middle of November, I think we have the summer to build out a portfolio. And I think it's going to rip November, December, and into January. And we're going to count down the last 2 years of the Trump administration. All right, guys, thank you so much for tuning into this video. Let me know your thoughts on SoFi in the comments down below. Don't forget to subscribe. I appreciate you guys so much. Peace.